Okay, welcome everybody to the webinar today. I'm Trevor, covering eBay topics, and today specifically we're going to be talking just about some of the tax implications that you might want to consider being a new business on eBay, because inevitably you'll be paying tax if you're making any sort of reasonable income. So I want to make sure you guys understand a little bit about that, maybe just some of the basics. Now, I guess I'll throw out a couple of caveats before we start. Number one is our office and our company is more of a marketing training company. And what I mean by that is our job here is to get you guys making money using various means, right? Using eBay, using websites, selling on Amazon, whatever the case may be. We're the ones that help you make money online, and that's what we're good at. What we're not as good at, and we don't really hang our hat on, is the tax side of things. Usually we reserve that right to people who are certified, who do that for a living. My background in college is actually in finance, and so I've had plenty of accounting, lots of accounting classes that I worked my way through back in my college days. Finance is very related to accounting, and so I've got a pretty healthy background in it, but not necessarily just from college, but from my own experience being an entrepreneur, because I've had to try to do my own taxes, and so I feel like I can speak from a spot of at least being able to empathize with you guys a little bit if you're trying to do your own business taxes, or if you've never done any before, or if you've never really considered, what that would be like if you're running an eBay business. Hopefully we can shed some light on that today. But I'm not a certified tax planner, so everything that I offer here is strictly, my advice, but it's not anything authoritative. I would make sure to get really good tax advice from a tax advisor, somebody there locally or somebody there that you work with come tax time. But the one thing I can teach you guys to do is just to get yourself organized and prepare for that time when you do have to, do a little bit of tax. Because after all, at least here in the United States, paying taxes is the law, right? If you make an income, whether it be from a normal job you work or from doing a business online like this, if you show positive income, you've most likely got some tax liability. Okay, so that's the crux of the issue, and that's why we're going to discuss this today. I want to talk to you guys about just generally what you have to understand from an accounting standpoint. And we're going to talk, this isn't going to be as related to websites, it'll be specific to eBay, but I suppose all of it sort of falls under this. First of all, what you guys have to do is you have to get organized early on. So my recommendation to you guys is to organize yourselves on a monthly basis, at least. That's probably good, especially if you're a business that's just getting started. On a monthly basis, I think it's wise to probably go in and just get your bookkeeping in order and make sure your numbers are wrapped up tightly and that everything makes sense for the month. Okay? If you do that on a monthly basis, come tax time when you've got to file a return for your business, you're not going to be unorganized. You're going to have everything ready to go. Let me tell you what you don't want to happen. This is going back a few years. It was the very first year I ever had a business, and I was like a sophomore in college, and I had started a parking enforcement company with a buddy of mine. He was a roommate of mine in college, and he and I got the bright idea to start this parking enforcement company. It ended up being a booting and towing company. And we started it, and we went out there and hustled some business early on and got some contracts in place, and we started our first business. And in that first year, we did a couple $100,000 in sales. Sales would be like service revenue or money coming in from providing towing services or booting services. So anyway, we were living the college life, so we were running this business, and it was a lot of fun. Both he and I were business majors and entrepreneurs at heart, and so it was kind of our first go at having a business. But I'll tell you what we were both bad at, and that was tracking all of the numbers for the business. And these two things right here that I'm going to highlight in yellow, we're talking our revenues and expenses. So the money we would make would come into a bank account. So that was kind of easy to track. We could track all the money we made during the course of the year just by looking at our bank account. And I remember when it came tax time, that was the easy part. I was able to go through each month, and I added up all the numbers, and sure enough, I had all the revenue we did for that year. Where it become very difficult for us, or where it had become very difficult, is this section right here, the expense section. Because what we did was we had expenses. We had to buy signs and buy equipment, buy uniforms for employees. We would play golf on the business. We were notorious for going out and playing golf or eating out, and those things could be considered business expenses to some extent. But at the end of the year, we hadn't tracked any of this. So I'll never forget this. It was a long night. He and I sitting up together, poring over receipts and bank statements and trying to make sense of what even happened over the course of the year, because we have to do that. It's our responsibility as a business owner, or as business owners collectively, to show the IRS every year what we made. And the only way you can know what you actually made on your business is if you're keeping track of your revenue and your expense. Now, you can do it one of two ways. You can do it the way we did it for my first year of business, and it was an absolute disaster, and it was stressful, and I was trying to make sense of numbers that happened in May, but I was in the following year, March, trying to make sense of those numbers, months and months and months ago. It's just really hard to do. So that's going to be my first piece of advice for you guys. Just monthly, make sure you track and take care of your numbers, and I'll kind of share with you what that means and how that should work. Okay. But the two things you guys need to track are these two right here: your revenues and your expenses. So let's talk about it from an eBay standpoint. From an eBay standpoint, where do you get your revenue? So I'm going to make notes here with you guys. Where does your revenue come from? When I say revenue, I'm talking about your sales. For an eBay business, where do you get your sales? Pretty simple, right? You only get it from one place, and that's eBay buyers, right? You shouldn't be collecting revenue anywhere else. That's where you're getting your sales. So that part should be pretty easy to track. Now, where do we know where our sales come from? Like, how can we track that on a regular basis? This is for those of you guys who maybe been tracking it a little bit. It's recorded in a few different places, right? Where are your buyers actually sending the money on eBay? Yeah, money's going to PayPal, right? So what should be pretty simple about this part, tracking your numbers. So let's say we're all doing our numbers for, let's say this is for January of 2015. I should be able to log into my PayPal account. And here's the key here, guys. If it's a business account, it's much easier. Because there's two types of PayPal accounts, right? You can do just a normal personal PayPal account, or you can do a business PayPal account. If you don't have a business account, you can upgrade it for free. But if you have a business PayPal account, you can go back and actually track all of your revenue for the month, and it'll add it all up for you. It's glorious, right? Because that means you don't have to go into eBay and add up each transaction. And I think I would pull my data from PayPal because ultimately those are true numbers. If it's showing you you're collecting any sales in PayPal, those are real numbers. That's probably where I would add up my revenues. So I won't show you here. I'll just kind of tell you if you've got a PayPal business account, there's a report section within PayPal that you can go to, and you can run a report on the previous month, and it's going to show you your revenue. So really easy to do. So let's just say, for the sake of this argument here, let's say revenue for last month was, let's say it was $5,000. Okay, total sales. All right, so that part's easy. So we figured out, but that's not how much we made, right? That's just how much money came into us. If we want to figure out what our profit was for the month, we've got to look at our expenses. So do me a favor, guys. Let's list some expenses here. What expenses? What expenses do we even need to be thinking about for our eBay business? Okay, Vince, you've got one already. Our merchanting. Who does our merchanting? It's PayPal, right? And what's the cost per transaction on PayPal, typically, for most of you guys? You guys remember? Most starting PayPal accounts are 2.9%. I mean, it's virtually 3%. I mean, I guess we could, for the sake of our numbers here, we'll round it to 3%. And that's plus generally 30 cents per transaction. Okay? So let's say, to make up this $5,000 worth of revenue we brought in, let's say we had 45 transactions. We could probably estimate what our PayPal fees would be. Now, here's the nice thing too. PayPal, in their reporting tools, will actually show you all of their fees they charged you over the course of a month. So you don't necessarily have to line by line add them all up, although you can. And inside PayPal, they have tools to do that. But there's a report in there that'll actually do it for you. Boom, it'll give you all of January 2005's PayPal merchanting expenses. But since this is just an example here, let's do a little math on this. So I'm going to say, if we had 45 transactions, and we're saying it's 30 cents a transaction, let's just do the math on that. 45 times 0.30, that's $13.50, plus what's 3% of 5,000? Because if we did that much in revenue, we're looking at 3%. So we're looking at about 150. So our total merchanting, so I'm going to say total would be $163.50, right? Does that make sense, guys? Are we all on the same page for that? Okay. And Sam, I'm pretty sure it's 30 cents. You were thinking it was 10 cents. I'm almost 100% sure it's 30 cents. Okay. So we're all on the same page. You guys good with that? So merchanting, that's one. What else? What's our next expense item that's a pretty significant one, generally for an eBay business? Yeah. And several of you guys said this, eBay fees. Okay, now eBay fees come in a couple of different parts, don't they? First of all, they take an overall sort of off the top percentage, which is 10%. Okay, that's called your final value fee. Okay, so 10%, at least the math is easy on this one, right? 10% is that's $500 worth of eBay fees. eBay made pretty good money off of us this month. 10% is pretty sizable. Now, where you can reduce this a little bit, if you had an eBay store, it would be 9%. So eBay stores actually reduced this a little bit, which may not seem like a big deal. 9% wouldn't have saved you that much, but it would have been sizable over the course of a year, probably. Or if your revenues far exceed $5,000, and I should hope, as you guys are moving forward with your business, that it will. You know, a percentage of gross sales savings is pretty significant. So, but that's you got to track that. But that's not the only kind of eBay fee we're looking at, right? What other kind of eBay fees are there apart from the final value fee? Or are there other eBay fees? Yeah, I'm seeing some of you guys comment now. So I'm going to say 1, final value fee. 2, we've got what are called insertion fees. Okay, insertion fees. Now this is kind of a tough one. You guys can look at a report on eBay to see what your insertion fees were like. After all, each month eBay invoices you for your entire month's worth of fees. So you can see and you can have a track record of exactly what those fees are. And you know, insertion fees. I mean, if you've got an eBay store, they're lowered. If you're taking advantage of the free listings that are offered every month, they're lower. But let's just say, for the sake of this month's example, let's say our listing fees were $60. Okay. So we'll say our total sales for this specific line item here, we're going to say 500, or our total expense $560 for eBay fees and for PayPal fees. Okay? All right. What else, guys? We did $5,000 in revenue here. What other expenses are actually tied to that? If you've got an eBay store, Sam, that's a good point. If you've got an eBay store, that would fall into your eBay fees. So absolutely. A lot of you guys who do have eBay stores, you're at like, what, $20 a month or so? So that would be included there. And I think eBay invoices your store fee along with your other fees. So you can pay that all together in number 2. Okay. You guys are all right on to probably the biggest expense. I'm going to call it this right here. That's kind of an accounting term. It's an acronym for cost of goods sold. By the way, do any of you guys have any accounting in your background at all? Maybe took a course in college. Maybe you've done a little bit of bookkeeping. Does anybody have a background in it? I'm just curious for the few that are here. No, it doesn't sound like it. Okay. So this term right here, cost of goods sold. That's what that is. And that's gonna be part of several different parts of the buying process when you're getting products. We're gonna classify this, well, especially you guys doing eBay. I'm gonna create a couple of different sections here. So number 3 is in fact cost of goods sold. But I'm gonna break this down into a couple of different sections. So that's gonna be, one is the raw cost from supplier. So if you're buying from like a retail supplier and the item cost and is listed at $19.99, that's what this would be. Okay, so that's the raw cost. B, you've got shipping, which some of you guys have brought up, shipping cost. And then what else is part of buying a product from a supplier or a retailer? There's one piece here. Vince, you already mentioned it. Yeah, tax. Tax. Now, is sales tax something that we pay all the time when we're doing the retail strategy? Have you guys ever come across any retail suppliers that don't charge sales tax? What do you think? Walmart does, don't they? In fact, general big-time retailers that have a presence, like a physical presence, all over the United States, even if you're buying from them online, they charge you tax. But you'll notice some places don't. Some places, for example, Overstock, that doesn't have a presence within a lot of states, won't be charging you sales tax. And if you were working with, so I'm going to just say this, not all retailers charge you tax. That's definitely true. And certainly wholesale suppliers, a lot of them don't charge you tax at all. So this tax field kind of applies to some, not all. But I'm going to say here, just for the sake of this example, let's say we had an item that was $19.99. Let's say the shipping on it was $5, and let's say the tax on it was $1. You don't necessarily need to keep track of all these individual parts when you buy something from a supplier. You just need to make sure you add them all up. So traditionally, when you make an order from like a Walmart or another retailer, a lot of times they break it down like this for you, but that doesn't necessarily matter. You just need to add it all up and get your final cost there. And so does that make sense? So like when you're tracking your accounting for the month, you're going to want to have a number that represents all of your merchanting, a number that represents all of your eBay fees, and then a number that represents all of your cost of goods sold. So in this case, you know, $19.99 plus $5 plus $1, we're at $25.99, right? That would be the total for that transaction, but that can all fall into this category. Okay? Cost of goods sold, does that make sense? That's going to be your largest line item. Anytime you're doing retail business, that's your biggest cost for sure. So let's say for this month, our cost of goods sold was, let's say it was $2,500, right? That comprises all of A, B, and C. Okay? So we've got cost of goods sold. What else? What else applies here? Actually, before I'm going to go through number 4 first. Hold on, I was jumping ahead of myself. Let me add number 4 here. It's probably not one you think much about, but how about this one right here? Returns, exchanges. I'm just going to call it, in this case, returns. Every once in a while we deal with returns, don't we? I'm sure most of you guys who've been selling with me for a while have dealt with a few returns. That's something you'll have to add up somewhere in your PayPal. You'll have to keep track of the number of times that you had a return. Okay? And the returns in accounting really shouldn't come on as an expense. Really, where a return should show up is a deduction in your revenue, because that's exactly what it is, right? It's a deduction in your revenue. I sold $5,000 worth of merchandise, but unfortunately I had $500 in returns, we'll say. So how much merchandise did you really sell? You really sold 4,500, not 5,000. So when you're looking at total revenue for your month of January, minus out the returns from that. Total revenue really should be, $4,500. And then your expenses come off of that. Does that make sense? Okay. All right. So there's one other category here that I would say would make sense. This is your main stuff so far. So let's just assume this was all your expense, guys. And yes, Rhonda was asking about, like, are there ways to automate your bookkeeping? Yeah, PayPal has some bookkeeping that sort of automates this. There's some through eBay. So there's some automation processes that are good. I want to teach you guys the intuition behind it, because I know some of you guys don't necessarily like to use software programs all the time to do stuff like this. And I think it's important just generally to understand the intuition behind some of this accounting. But there are some programs that'll track a lot of this for you that I'll share with you guys today. So if this was it though, total revenue is $4,500. What's our profit showing for this business at this point? Somebody do the math. I'm going to pull out my calculator here. What's our profit for January 2015? I'll give you guys a sec, because I need a sec anyway to add this up. Anybody got a number yet? I won't tell you what number I've got yet. I'll wait for you guys. What is profit? And by the way, don't let this part confuse you. That was just for an example. Really, we've got these three expense categories. Okay, so a lot of you guys have the right answer, I can see, and a lot of you guys are close. Our total revenue is actually $4,500, right? Because we had $500 in returns. So $4,500 minus our merchanting from PayPal, which ended up being $163.50, right? Then we've got to take away our $560 for eBay fees. That would be eBay insertion fees, final value fees, store fees. And then we've got to minus out our $2,500 for our cost of goods sold, which would be let's just say, for example, Walmart was your supplier exclusively. That would be your cost of the product, your shipping and your tax from them. That leaves us with a grand total of $1,276.50. So a lot of you guys were close on that. Some of you guys amended the numbers there. 12. Does that make sense? Did anybody get a number different where that doesn't make sense? Now this number, why? So tell me, guys. I mean, I know this sounds like kind of a stupid question, but I'm going to ask it anyway because I don't think it is. Why does that matter? Like, why are we going through all of this? Why are we trying to figure out at the end of the day what our profit was in January? There's multiple reasons, but why do we take the time to do this? Just so we can brag to our friends, right? That we made $1,000 online last month. Sam says so we don't all go to jail. Yeah, absolutely. You know, you've heard of people being in jail for tax evasion, right? It's like you make all this profit off of a business and then you don't pay your fair share. So I would say the number one reason why we do this is, yes, for so we stay out of jail. That's funny, Sam. So we follow the law, right? The law states that as you make income, you need to pay tax on that income. But we have to figure out what that income actually is, don't we? because our income isn't our sales. Our income is our revenue minus our expense. So we actually made $1,276.50. So we pay tax on it, don't we? But and I'll leave this more to you and your tax advisor. It's not like you're paying tax on it every single month, but you need to keep track of it so that, like, at the end of the year, when I was doing my taxes in that example I gave you guys earlier, you're not scrambling to figure this stuff out. Okay, so we made this much in this month. How much tax do we owe on this? So we profited in January $1,276.50. How much tax do we pay? What's the answer to that? Doesn't that kind of depend, though? Sam says too much where he's from. Yeah, that's probably true. I feel like it's too much where I'm from. You know, that's going to vary a little bit, guys. It's going to vary on there's other factors that kind of go into this, but it's going to vary based on your current income. It's going to vary maybe on your state tax laws. Some states have higher tax rates than others. So it's it's really hard to say how much. I don't know. That's something that you tax plan with your tax advisor. But let me kind of give you just a general estimate, and this is why it's kind of important to estimate. Let's say we actually did make this money in January. And let's say our tax rate, federal and state, ended up being like 25%, which may actually be close. Maybe it's closer to 30 for some of you guys. But let's say it's actually 30%. Okay? At that point, how much tax do we owe the government? Well, we just take 30% of 1276, and that'll tell us. So I'm going to do that. 1276.50 times 0.30. We owe, and I'm going to put 382. Somebody check my math on this. 95. Is that what you guys are getting? Yeah, I'm seeing that confirmed. That's how much we owe off of that month. Okay? So this is important to kind of know on a monthly basis, because if your bank account is just rising, like your PayPal account keeps going up and up and up and up, and then you're like, great, I just made $1,276. Cool, I'm just going to spend it all that month. I'm going to pay myself. I'm going to pay off a little debt. I'm going to make an extra payment on my mortgage with my business. That's fine to do, but just remember, at the end of the year, you're still going to owe some tax on what you made for that month. So let's not spend it all. I guess that's my point. You guys know probably the famous finance talk radio guy, Dave Ramsey. He teaches for small businesses to be conservative and somewhat accurate. Usually, whatever your business makes during the month, just take 25% of that and put it somewhere else, because that's going to be what you pay for taxes later. We just estimated 30, but you can kind of do what you want there. It'll be close. That's the important thing. Okay, are we kind of clear on that part, guys? Does that make sense? Okay, so Jeff, you bring up the next point I want to talk about. If you guys just did your taxes this way, we figured out together that we owe this amount, right? $382.95. And Rick, you're alluding to it as well. There's other write-offs here that we can take. There's other tax deductions or expenses that we can put on here. And if we do that, it lessens the amount of tax that we owe. Okay, so let's add some extra. We're going to call this category 4, other expenses. And this is where it pays to have a really good accountant, because they can find for you all the extra little deductions that you can take that will help show that you made less. Okay, and ultimately that's our goal here to some extent. We want to make as much money as we possibly can, but at the same time, guys, we don't want to show that we're making tons of money. Because if we show the government we're making tons of money, we get taxed a lot, right? So if we can make a lot of money but show we're making less in a legal way, we don't get taxed as much, and we'll illustrate that right here. So what other write-offs are you guys talking about? What other expenses maybe can we consider? And again, guys, let's throw out the caveat. I'm not a tax expert. This is just from my experience over the years. I really want you guys, when it comes to your taxes, to make sure you talk to somebody who knows what they're talking about, who's certified, who can do this the right way. This webinar here today is just to teach you guys how to get organized and to help you understand kind of some of the intuition behind tax. But take this to somebody certified, because that I am not. So what write-offs? Okay, you guys are throwing out some things here. How about stuff for the office? Absolutely. And I love this one. I'm gonna say a office expense, which could be, and you listed a few there, Sam. You said, you know, maybe paper or ink, pens, you know, whatever, a picture for the wall, right? Like you can get kind of creative with this, but I know one year my wife and I we needed a new computer, and so we bought one, and you know it cost us some money, and I'm going to use it in this example. I'm going to say we bought a new computer for $500 that month. Okay. The cool thing is, if you use your computer for your business, at least in part, you can probably write off the whole expense. So I'm going to say I just took a computer expense for $500. Is it all for business? No, but you know I bought it for my business, so I'm going to take that expense. And then I guess included in this for those you got, I mean, you can actually take a little bit of a deduction, and I'm going to leave this for the accountants out there that help people with their taxes, but you can take a little deduction for like your office space. Like you can write off a certain amount of square footage for your rent or for your mortgage, which is pretty cool. I won't get into that. That's why you have accountants. They can do that kind of thing, but that's a possible write-off. And I'm going to add to that. Let's say you guys were. This came from you, Don. Shipping expenses. If you do a little bit of shipping yourself, let's say during your first month of the program you sold 5 or 10 items from home and you had to buy a little bit of shipping and packing material. You could add that. That's an other expense that we could add. Vince says, how about the internet? What about your internet expense? Yeah, for sure. I think I pay like $80 a month for my internet. So there's $80. And what's cool about that is you were going to pay that anyway, but now you can actually take it as a business deduction or a business expense. Here's another common one. How about your phone? You know what my phone bill is for my wife and I right now? It's $175 a month with AT&T. It drives me crazy. I cannot believe I pay as much for our phones as I used to for like a car payment back in the day. Right? Isn't it crazy? But at the same time, we need our phones because we carry the internet on it, and we do text messaging, and you're doing emails to and from potential eBay buyers. Depending on your accountant, I actually write off my entire phone. Okay, that's just what I do. You guys talk to your tax advisor and let them know, and they'll tell you what they think you should do. But I don't think it's very uncommon for somebody to take the whole entire phone bill and make it a business expense. And that's pretty cool stuff, right? Because I'll tell you, if I didn't have a business, I would still be paying $175 a month because I still need my phone, I still need the internet, I still need text messaging. But now I get to take it as a business expense, and I think that's cool. So I take that. So there's my phone expense. Let's see, what else? Utilities, yep. utilities from home, and we would maybe count that in your office expense, but some of your utilities you can write off. Investment into the business. So I'm not sure on the nuances of this, but I know for those of you guys who are buying like consulting expense, right? You get into a coaching program like this, you can take, I mean, that's a real business expense, right? Whatever that cost would be. And there's some other justifiable ones, like what happens if I went out to eat a couple of times? You can take a portion of that. My buddy and I, who I was telling you guys about earlier, where we started that business in college, I swear we threw away a good majority of our profits just to playing golf all the time, because that's what he and I like to do. So we played golf a lot, and because we were business partners, and that was sort of, we did talk about the business on the golf course, we took a lot of that as a business expense. But this is getting into more of the nuances of what you can and can't deduct, and that I leave for tax advisors. But we take 50% of any of the sort of food and entertainment expense. So you go out to dinner with a friend and you're talking to them about your business, and you know, depending on how aggressive you want to be, you could write off that expense. So these other expenses here that I'm talking about, guys, they can really lower your tax liability. Let's add these to the mix right here. So this other expenses tab, let's just add up these little estimations we made. And there's probably others that we could take, right? This certainly wouldn't be all of them, but let's just pretend it is for the sake of our example. So I'm going to take 500 plus 25 plus 80 plus 175, 780 is going to be our expense here, okay? Now that changes the numbers down here. I'm going to do this again. We had a profit of something different now. Run the numbers with me, guys. So we had, what did we have before? 1276.50. Right? 1276.50 minus our other expenses that we were smart and took. So how much did we actually profit now in January after minusing out our $780 for our other expenses? I'm going to call this new profit. What number you guys get there? See if we got the same thing. I'm getting 496.50. Right? Yep. Looks like you guys are getting the same thing. Under the same tax rate, assuming that stays constant, we owe how much now? Right? Does that look right to you guys? It's pretty substantial, isn't it? And that's why it pays to have a good tax advisor. If you don't know enough about this kind of stuff and you were doing your own taxes, you might have told the government you made $1276.50 and then you would have paid $382.95 that month. Someone who's smarter about their expenses, they said, well, wait a minute, no, I think I can take my computer as an expense. I forgot about my shipping, my internet, my phone. Actually, I don't know nearly as much. I owe half of that, and I owe $148.95. Okay. So are we all on the same page so far? Is this stuff just absolutely boring you guys to death, or do you feel like this is good? Is this valuable? Some of you guys probably already know a little bit more about this kind of thing because you've done some of your taxes before. Like, can we all agree here that, and I'll never forget this. I mean, the first time, so I did taxes myself that one year I was telling you guys about, and I can't remember exactly what I paid, but I guarantee I paid more than I should have, because the next year I got an accountant that was recommended to me that I thought was, well, that came highly recommended. So I didn't know anything about them, but I went ahead and used them, and I paid some money for their work. But they know the little nuances of deductions, and they know how to do it right. The thing you don't want to do, guys, is you don't want to kind of guess at deductions yourself, right? What if, for example, what if I got real aggressive here, right? What if I added an extra little expense and I said A, B, C, D, E. Let's say I took my wife out to eat, and instead of using my personal credit card, I used the company credit card. Okay, and it was $50 to go out to eat. And then let's say I was playing golf with my buddy, and it didn't have anything to do with the business, and I was like, oh well, I'll just put it on the business as a business expense, and that was $100. And you can see how easy this would be to do, right? And then it's like, oh, I've got to go grab something to eat. Doesn't have anything to do with the business, but I'm going to call it a business expense. There's another $5, and so on and so forth. If you start adding a bunch of unrelated business expenses here, tell me, guys, what is that okay, or is that problematic for us? Because we've already seen here, by adding these extra business expenses that aren't, that are qualified business expenses, they can really lower the amount of tax we pay, right? But what if I do this? Vicky's okay. You said not okay, Vicky. Why is this not okay? And why is that a problem? And do people actually do that? Don, that's a good point. I could use my PayPal business card for something, but I better adjust my numbers at the end of the month because it's not a business expense. I could use my card, but I have to make sure I adjust it. That's a good point. Okay. Do people get away with this? Let me ask you that question. Absolutely, people do. I guess in the accounting world, they call it quote unquote cooking the books, right? These aren't accurate numbers. We're showing lots of extra expense that doesn't really exist. It's not business expense anyway. And so I go to the government and I pay much lower taxes, right? And who's checking me on this? Right? What if I actually did this, guys? What if I added all these extra expenses, and instead of showing a profit of 500, I show a profit for the month of like 100? And then I take my 30% tax on that, and I pay substantially lower than what's real. Who watches me there? Rick, that's a good answer. Rick says God knows, right? Truth is, nobody really actually knows, right? I could file this to the IRS, and they wouldn't know anything differently. But that's illegal, guys. That's 100% illegal. You could get thrown into prison for doing something like that, right? If you were cheating the IRS out of money that you should be paying them, and people go to prison for stuff like that, that do it on a large scale for big corporations, that's wrong. And what happens is, if it looks fishy to the IRS because you've been cheating the numbers a little bit, and they know, like, there's some things they look for to make businesses look like they're being fishy with their numbers. If that happens, somebody said it earlier. I'm looking through who said it. Yeah, Jeff, you said you could get audited. The IRS every once in a while will audit a business if something looks fishy, or I think sometimes they do random audits, and they say, hey, you need to prove to us that these were real business expenses. You have to prove every one of these expenses. And if I came to them and I couldn't prove some of this stuff, I could either get in a lot of trouble, or I could owe a lot of back taxes. And that's probably more likely. If it's not, if you're not doing this on a grand scale, they'll probably just make you pay a bunch of fees and fines and back taxes. So I guess I tell you guys all that, and it sounds like you guys are pretty familiar with that being the case. But I mean, let's just, can we all just agree to be honest with our taxes, and work with a good, honest accountant, who's not going to cut corners and stuff just to save you a few pennies. I think it's really important to take deductions and to take real business expenses and not pay nearly as much as we have to to the IRS. And I think that's one of the biggest advantages of owning one of these businesses. It's really cool that I can write off my cell phone. It saves me money. It's kind of satisfying to do. But it's not satisfying when you're writing off stuff that's not fair and you can get in trouble. So your guys' job, though, I don't think, I mean, you're welcome to do your own taxes if you feel like you can. And some of our clients do. And I've done it for my business before. I feel a lot more comfortable if I'm working with, somebody who knows what they're doing. I'll keep my books like this. And there's different softwares and stuff you can do it with, right? Like you could do it manually, like we just did it here. Like you could have your own Word document and just keep track of stuff monthly like this, if that's what you're comfortable with. I've even got a few clients that track all of these numbers in like an actual notebook, and they write them down. They don't even have them digitally. They just write them down. Others have spreadsheets they do. Other people do these different accounting programs. There's some for eBay. PayPal actually does some accounting work. You could hire a bookkeeper to just keep your numbers for you. There's a lot of things you guys could do. But I think because oftentimes your business is so simple, and this isn't too hard, you're just keeping track of your numbers and staying organized. You could probably do your bookkeeping, and then maybe you take it all into a tax advisor or an accountant who can file your business return. That's kind of what I do. But whatever you do, guys, let's just make sure we do it honestly and it's all on the up and up, and hopefully this was at least somewhat instructive, if for no other reason to help you understand the intuition behind running a business and keeping track of your taxes, so that when tax time comes running around, you guys aren't all stressed out because month by month you've gradually just done your numbers. You sat down for an hour and a half each month and you did this and you tracked it, and at the end of the year you can go into your accountant and you can hand them all your numbers and you can say, hey, these are my accurate numbers for the year. What else do you recommend I deduct? Let's try to lessen my tax liability, and they'll help you do that. Okay, so let me see. Actually, I think I'm going to finish with that and then answer, because the webinar's already gone a little long. I'm going to finish with that comment. You guys who are here live, stay on. We'll talk a little bit more about this. Let me leave my caveat just one more time. I'm not a tax professional. I'm not licensed to give tax advice. This webinar is simply just to help you guys understand some of the intuition behind it. I always recommend you work with an expert, but learn as much as you can, because as an entrepreneur like you guys are and as business owners, you got to know some of this stuff.